According to Yahoo Finance, ZIM is paying a dividend of about 70%. They paid a nice dividend quarterly, and ZIM still has to pay a dividend of $6.40 for the last quarter. I've received many questions, such as if I buy now, will I get a dividend? Or when should I buy and when should I sell? So I want to clear up the major questions I've been getting. Specifically, what will happen to the stock price when the dividend is paid, and if that huge dividend is sustainable. First, will you get a dividend if you buy the stock now? If you look at the ex-dividend date, you can see that it is on April 4th, 2023. When you usually buy a stock before the ex-dividend date, you get a dividend. But the problem is, you have to check the record date. If you go to ZIM website, you can see their dividend history. And the record date was on March 24th for the last dividend payment. And the payable date is on April 3rd. Why there is such a big difference between the record date and the ex-dividend date? Because if you look at the last quarters, you can see that ex-dividend date was set on day before the record date. If you want to know the answer, you have to read their latest press release, which says, because the dividend per share exceeds 25% of the stock price, the ex-dividend date was set on April 4th. Moreover, if shareholders who wish to receive the dividend must hold onto their shares until the ex-dividend date. So even though the record date was on March 24th, you still have to hold ZIM shares to get that dividend. I hope it is clearer now. If you buy the stock now, you won't get the next dividend. If you bought the stock before March 24th, you must hold the shares until April 4th. Now, if you bought the stock on March 24th, I'm not quite sure if you get a dividend. That depends on your broker, because your broker has to record the holders that day, and I don't know how their system works. So, if you are the lucky person who bought on March 24th, you better ask your broker if you are getting that dividend. You need to check if you are on that record list. Now, there is another catch, actually two. The first is that you'll pay a tax dividend of 25%. If you own at least 10% of the company, then you'll pay 30%. This is the Israeli tax. You may be able to get a tax break, but you have to fill out some forms and speak to your broker. Anyway, for this payment, you can't forget about the tax reduction, because those forms have to be completed long before the dividend is paid. So you can speak with your broker about future dividend payments, if you can get a tax reduction. The second catch is that when the dividend is paid, the stock price will decline. Now the stock price is $20.41, and the dividend that will be paid is about $6.40. So when the dividend is paid, that amount will be subtracted from the stock price. This means the stock price will decline to $16. This is the first decline. I don't understand why people want to buy the stock now and get a dividend of $6.40, then be taxed at 25%, and then to have a decline of about 28%. I really don't know the answer to this question. Now another problem is that huge dividend is not sustainable. Their earnings are expected to decline. If you want to know how much and why, you can check out my recent full analysis of ZIM, where I discuss the risks, possible opportunities, and what will happen to the stock price. And tell me in the comments where you see ZIM in the next 10 years. And if you find value in this video, please give a like and subscribe to see more videos like this, because I want you to succeed.